Hi everyone. I just want to know if you can see me. I just want to know if you can see me or hear me. Um, just let me know if you can see me or hear me. Okay, good. I think we can start. Thank you for coming today. And because I have my laptop in front of me just to see your questions, I'll be looking sometime into my laptop. Let me know if you can hear me. All right. Without much ado, we would just start the topic of today. Okay. So welcome again to my live session. This is the third live session we are having this year. My name is Buki Obikule, and welcome as usual into my studio. And today, as usual, we'll be talking about personal finance. We'll be focusing more on investment, and we'll also be talking about job search, something in the field of career. And while I go ahead with the topic, if you have any questions that you would like me to talk about, please do not hesitate to put a question in the chat section. I would look at it, I would pick it up, and I'll be more than happy to hear what you have to say or to answer your own questions. So what I've done is that I've collected a couple of questions that I've been receiving in the last couple of weeks. I put them together and I try to cluster them into three. So we have like 3 questions for area of investment, and we have like 3 questions or 2 thereabout in the area of career, job hunting, and I would like to, so that's what I have done. And don't forget, if you have questions that you would like me to talk about, please be sure I would be more than happy to talk about those questions. Can I have, once you join, can I have you can just send the chat just to know, just for me to encourage me and to let me know that you are in today, you are here with me, you are participating. I don't want to just be talking to the screen, so just participate with me. Put in your thumbs up, put in your engagement. I would be more than happy to see those engagements, because it also tells YouTube that this is a fruitful session and we're not just sitting in front of the camera, so just amuse ourselves. All right, guys, thank you so much for your time. Thank you for blocking your calendar with me, and I'm happy you are investing this time into you're making this investment for yourself. Yeah, I'm really happy you're doing this. This is a very important investment that you need to make for yourself, and you're doing that in the full sense of it. Okay. All right. Then I would go straight without, like I said, the budget of today is for us to spend like 1 hour, and if it's going to be less, so be it. It might be less. It might be less, that is, we might not end up using for a whole 1 hour. So thank you. I can see a chat. So it might not be up to 1 hour, which is fine for us, and we just go ahead and do what we have to do. Okay. And yes, I think I will just start straight away. Okay, just give me 1 second. 1 second, just 1 second. I'm trying to fix something here. Okay. All right. So the first question we received, or the first question I got, was that how do I identify a legit investment? platform. How do I identify a legit investment platform? You know, these days, you see a lot of people, you see a lot of things on the internet saying, oh, if you drop some amount of money today, you're going to get 50% in 3 days. How is that ever going to happen? You should ask yourself, what are these people investing in? And trust me, there are investment platforms like that. They promise you heaven and earth, 50% ROI in 3 days, and then you get another 50%, another 10%. I don't know. They just keep promising you. So there are a lot of those kind of platforms out there. A popular one I came about today while I was researching was called Wazobia Investment. And these guys are actually offering 50% ROI. And I'm like, what? What are they even investing in? What is their strategy? What product? Show me if this is how money falls from heaven. So the question is, how do you identify legit investment platforms? Okay, so the first thing you want to do is that you want to check their transparency. Like, how transparent is this platform? Can you easily tell who is behind the platform? Can you easily tell who owns the platform, who runs it? Is it a company? Is it a registered company? Are they under any form of regulations? Like, is any regulators backing them up, or are they following any form of regulations, you know, like the financial sector regulation for the country you are living in? You need to find out. Most of these illegit platforms, they don't have this form of regulations. And what regulators help you do is that they kind of give some kind of guideline, some framework on how these platforms should work. So when things goes out, you know who to call or who to report to or who to question. But if you're investing in a platform that doesn't have any form of legislation backing it up, if anything happens to your money, you cannot cry to anybody, just cry for yourself. So that's the first thing you want to do. You want to check how transparent they are with their information. Who are their backers? Do they have any regulators backing them, or are they following any regulators' guidelines, right? So that's the first thing you want to check. All right. The next thing you want to check is that you want to see how, just give me a second. The next thing you want to see is that you want to see how are they just give me a second. Something is wrong here. Okay, the next thing you want to see how are they, what is their rate of, they have humorous return rate. Like I said earlier, I found one investment platform that promised a rate of return of 50% in 3 days or 5 days. Excuse me, that is completely out of this world. 50% in 3 days? I mean, is there dollars falling from heaven? Can somebody help me? When I saw it, I was speechless. Like, I didn't know what to say again. I was like, dude, what are you doing? How are you getting this money? If money is that cheap to find out, like to get, everybody will be a billionaire or everybody will be a millionaire. So when you see a platform offering you humongous return rate in a very short time, what do? You take up your shoes and run, because the thing is, it's very likely that you're going to lose that money. It is very, very likely. And you know, the thing is that most of these platforms like that, when they promise so much high interest rate, they write in thin letters saying, oh, this return rate is not promised, or something like that. They just put some funny disclaimer clause somewhere, very thin, that if you're not careful, you won't say it. So you have to be wary of this kind of platforms. When a platform promises you 50% or 30% within 3 days, within 5 days, it is very likely it is illegit, it is illegal, it is a scam. It is high likelihood. Okay, but if you still want to be put your money in those kind of things, go ahead. But if you are the type that, you know, look at things in the long-term perspective, and you're not in a rush to, you're not in a way, you're not someone who want to rush into investment. You want to have a second look at such investment platforms. All right. The third thing is that I said the third thing you want to look at is you want to look at the genuineness. It's also part of the first point I shared, how to identify in terms of transparency. You want to look at the genuineness of this person. You know, I said that you have to look at, is there a face? Like, is there a human face behind this thing? Is there someone saying, okay, this is my company? Is there someone that the law and order can catch if anything goes wrong? Some of these platforms, they don't really have human faces. And sometimes even if they have, they don't even have a specific contact address for you to contact. And even if they have it, they have these addresses in funny places. So for example, if you're in the US, you hear like they are in one of those highlands, in those post box addresses. Nobody owns it. It's just a post box. So all your emails or anything goes into this post box. Yeah. And for example, if you're in Nigeria, for example, like this was a thing I read about. I searched through all their platform. There was no human face I can actually attach to this investment. And when you see things like that, it smells of foul play. All you see is just an email address saying if you have any questions or for support, contact this email. Email is just an electronic box. Excuse me. So you want to be sure that there is a human face attached to this particular investment that you are looking at. All right, that is the third tip I would be offering you. Okay, like I said, if you have any questions, do not forget, just drop them. I will pick them up as I go ahead. All right. The other thing you want to look at is you want to take a look at their privacy policy. Yeah, I know this might sound like, okay, now it's illegal. No. If you're investing in a platform or you're using a platform as your investment platform, you want to take a look at, you want to do your due diligence. And one of the due diligence you want to look at is that take the time to read through their privacy policy. What does it say? So, example of, I saw a platform that says, okay, you know, for you to if they pay you this 50% after 3 days, you have to do like a kind of what's it called, a video review of them. If you don't do this video review, you're not going to get your money. And I'm like, excuse me, how does me doing a video review for you add up to my investment? It's my money. I mean, even if I had to do a video review for you, is there anything coming to me? People who promote other people, they pay for it, like it's being paid for. So in a way, they are using you as a free advert for their own company. And then what that means is that if peradventure they don't give you, you know, they don't pay you the full amount they're supposed to pay you, for example, don't forget that you've done a video review for them. You've told other people to go and join them. So your name is already attached to their brand. If anything goes wrong, people that saw you on that video, they will come for you. They'll say it's because of you they joined them. So you want to look at their privacy policy. You want to see what exactly, how does that affect you? What does it say about your investment? Does it infringe on your own basic human rights? You know, you want to look at it properly. You want to take a very deep or closer look into that privacy policy. You don't want to sign up in an investment that says that, okay, if you don't bring some other people, you're not going to be able to get your money. They might not tell you in the first part of it, but that could be something they would put in that policy. And then they tell you, oh, didn't you read our privacy policy? Didn't you read the terms and conditions? So you have to be really, really be careful. All right, so that's the third thing that's the fourth thing I would say about how to identify legit investment platforms. You want to be sure there is no idiot sentences or paragraphs or clauses in their privacy policy. Okay, the other thing you want to be sure is that you want to be sure that this platform has a clear exit strategy, which means that if push comes to shove and you want to get out, you want to get your money out, how easy is it for you to get back your cash? If it's not easy for you to get back your cash, then you don't want to invest, because I can tell you, if that money goes into that investment, it is never going to come out. It is not going to come out. What I would do is, like this platform I said I found, this Wazobia thing, I would maybe probably do a review on them, because I really think it's just a scam. Seriously, I really think it's just a scam. I mean, this platform, they said, so after I read through their T&Cs and their privacy policy, there was no way or nowhere they mentioned, okay, if you're at a point in time you decide to like stop investing with us, you have to like take out, you can do this and this to get back your investment. There was nothing like that. In fact, they tell you, if we are to pay you back, if you have to pay you your initial investment, you have to reinvest. If you are to pay you before they can pay you your first ROI, you have to reinvest your capital. It's my money. Why must I reinvest? Which means if you're not reinvesting that capital, you're not getting any money out. Tell me, how is that not a scam? So that's, by the way, so that's just an example of one. But for other platforms that you're using, try and see what exit strategy do I have out. Is it as easy? Some of them, it's very easy for you to give them money. Like you just set up one or two things and they can debit your account immediately, right? But then it's not easy for you to say, okay, convert whatever shares I've bought with you or whatever investment I have with you, convert it back into my account. They don't have that reverse engineering system, and that is what you want to check out. You want to be sure that you are able to get your money out as soon as possible, even faster than how you got your money in. Make sure you actually check out for that. It is really, really important. Otherwise, you're just putting your money in a deep hole that will never come back. Okay, I hope these 5 things have given us answers to how to identify legit investment platform would help you in your next investment. And if yes, I have one or two that I would recommend, but let me just quickly finish Oladoyin. So look at these 5 things that I've mentioned now that you should look out for in terms of how to identify a legit platform. If you are investing in one platform right now and this platform does not have any of these things that I've listed, you want to see how you can get your money out as soon as possible. You want to make sure you want to get your money out if you can still at all get it out. But if you're not in anyone, good for you. Now you know what you need to look out for when you want to invest in such platforms. Because like I said, many people are losing their money and there are fake reviews out there, and you want to be sure that you're not throwing away your hard-earned money. I mean, you sweat for it. Why should you throw it away? Okay. All right, guys. So that's the first answer that I will be answering today. And then Oladoyin asked, okay, do you have anyone you recommend? Yes. So for example, for me, I'm a lot into digital agricultural investment, right? And I would recommend Agro Partnership anytime, any day, because it's very easy to invest and it's very easy for me to get back my money. I would also recommend, for Nigerians, I would also recommend Crowdy Invest. They're also very easy. It's very easy to invest in them, and also it's also very easy to invest to get your money back. In terms of equity, in terms of stocks and all of that, so investing in shares and stocks and all of those things are also easy form of investment, but maybe you want to use a platform as well, like an online platform. online platform. So for example, I use trading 212 currently, and it's easy for me to invest. And if I say, okay, I want to sell off these stocks that I've bought, I want to sell them off and get back my money, it's also easy for me to place an order to sell and I get back my money, right? And that's also an investment platform. So there are a plethora of things or platforms that you can use actually to do legit investment. They are real ones, but I can also tell you that they are very fake ones that are only out there to invest in. All right, I would be sharing my referral code. Thank you very much for mentioning that. I'll be sharing my referral code with you. And don't just go on those links and start. No, don't do that. And start registering yourself. Please, please, please wait for my referral code. I will drop my referral code on this video after this live session. Thank you for the reminder, Olado Taiwo. Okay, so the next question I'm going to be answering about investment is that the question was, are investment clubs good, and what should I look out for in one? So someone asked me that question. What do you think about investment clubs, and what would you look out for? So first, what are investment clubs? Investment clubs are a form of clubs, like like gathering together of people with the aim of pooling their resources, their ideas. So resources here doesn't just mean money. They also pool ideas. They also pool together researches that they've made to invest in different forms of investment. So for example, if you desire to invest in several stocks, right? And you know that for you to be able to invest in those several stocks, like you would want to, it might cost you like $100,000. Let's assume. It will make sense for you to partner with some other people who also have the same challenge, but then they want to invest, right? They have the same challenge of not having the 100,000. Maybe they also only have like 10,000, right? But so you guys have the same challenge, you have the same resources, and you have the same will to achieve the investment goal, irrespective of your current circumstance. So so you form a club by coming together, bringing together, like, so if like a number of people, it could be 5, it could be more than 5, it could be 10, but I wouldn't suggest like making the party too much, because if the party gets too big, you know, there will be some people that will not be, it will be difficult for them to commit. So I think the lesser the party, the better. You don't want to be too small so that you won't have to strain yourself too much, and you don't want to be too big that you won't be able to control the party. That's what I would suggest in terms of investment clubs. So it's a good way to pool resources together with other people and create that portfolio investment that you really, really desire, and that's an investment club. All right. So what are the things? So the question was, what are the things I should be looking out for when I'm looking at an investment club? First, you want to look at, by the time you're forming this club, you know, people can be very funny. So you want to be sure that the people that you're forming this club with are people that you can work with. They are people you can talk to. Not people that all of a sudden they feel too big, or they feel threatened, or they feel uncomfortable, and you're not able to work with them. I know once money gets involved, people can be funny. So you want to be sure that there are people you can work with, people you can talk to. The next thing you want to be sure is that there are people that you trust, and there are people that can be committed. So you're not just able to work with them, but there are people that you can actually trust, and they're also committed. They have the same desire, the same will like you have, to grow their investment portfolio. They want to grow. They're not, let them say, hungry people. They are not there to make you as their opportunistic. Like, they're not there to make you do all the work and they just know. There are people you want to, they're able to also roll up their sleeves, and they're able to work. So those are the people you want to have together in your club, right? And you know if somebody is to be trusted or committed by what they do, you know, by the way they do things. You know if they are committed to their courses, or if they are to be trusted. So for example, if you have a friend, you borrow this friend some money, and this friend of yours is finding it difficult to pay you back the money, even though you know that he has the money to pay back, right? But he's not paying back. I don't want to get into an investment club with that kind of person, because that person is an opportunistic or an opportunist, right? So there are ways you could find out if someone is to be trusted or committed. So you want to have somebody, or you want to have people in your club that to be trusted and also committed. The other thing is that you want to make sure that there is a legal structure. You know, when things go south, there's a legal structure to be able to split up back, right? So let's just dwell anyway on just the negative part, but then the legal structure helps you to really identify and put things into context. Who owns what, right? Who is responsible for what, right? What are the commitments of everybody in that club? Having a legal structure helps you to do that, right? And so that is the third thing I would suggest that you should look out for when you are joining an investment club. The other thing you should look at will be the size, which I already mentioned. Like I said, you don't want to have too little in terms of numbers, so that you won't be strained in terms of resources, right? And you don't want to have too big, like 100 or 50 or 30, maybe 20 is okay, because then, like I said, the bigger the party, the harder it is to control. So you want to have something that you can easily work with. Okay, so those are the 4 things I would mention. The other point I thought of is that, okay, what is their interest, right? What is the interest of these people? Are they interested in growing like very aggressively, or they are more laid back in terms of how they want to invest in? Is the club made up of people who are looking for the 15% ROI in 3 days? Or is it made up of people who are into long-term perspective in terms of investing? I don't want to get into an investment club with someone that wants to invest now and get 50% in 3 days, because that person is going to lose all the money that we gathered, right? So you don't want to get into an investment club with such a person. So look for people who are like-minded with you in terms of their investment perspective. I hope I've been able to answer this particular question. If you have any other question that you have, or any other thing you want me to highlight under how or what kind of investment club I should join, do not hesitate to drop them. One other thing is that, you know, because now there are so many things, so I will do another video about investment clubs in the coming days, and you can go into that video, because then I will tell you, I will give you more highlights in terms of what an investment club actually do for you, you know, before they help you with fractional shares. If you're not, for example, if you're thinking of buying Amazon today, is like $3,000, and that's just one piece of it. I mean, a couple of weeks ago, one Tesla was costing like almost 1,500. A Google stock today is around 1,300 or 500. So you want to, by the time you buy 5 or 10 of those, that's like 15. So for example, by the time you buy 10 of Amazon stocks, that's like $30,000. That's a lot. So if anything happens to Amazon, all those and it's not so good, which means all those $30,000 would go down south. And that is why investment club is important, right? Because then with investment club, you kind of spread your risk with other people, because they're coming together to build a portfolio, and then you're able to spread your risk. Instead of you want to buy Amazon, but you don't want to spend all your money on Amazon, you can buy other things, because the other people are also buying part of those other things, right? So, but what I would do is, what I would do is that I would create a video on investment club to explain to you further on that particular topic. And also today, some of the things that investment clubs do for us, there are a number of platforms that actually do them, right? Because investment clubs don't just help you in terms of investing. Sometimes they help you with emergency funds, right? They help you in terms of borrowing. They help you in terms of so many things, right? So a number of platforms today actually offer that service, and that's why so many people are not so many people, some people are not looking any longer into the traditional investment club. But I will not roll it out completely. I mean, the traditional investment club, I will not roll it out completely, because there's something about having people, knowing people, and working with real people, because if anything happens, you know who to go to, right? So, and that's why, as much as we do the contemporary or the digital investment clubs these days, we should also spread our risk and look out for the traditional investment clubs, right? Yeah, because that way we can also build our net worth and our network. All right, I hope that's been helpful. There is a question saying, does this relate to real estate investment? Yes, thank you for that question. Of course, this actually relates to real estate investment, and I would say that it's one of the, for me personally, it's one of the best things, or one of the things I'm happy for in terms of like the gift of investment club, because you're not okay. Let me just give you a simple life testimonial. I'll say a simple life example. Right, so imagine you are living in the diaspora and you are interested in investing in your home country in real estate. But for example, if you are from Nigeria, there's this issue of omonile, there's this legal issues, things just going everywhere. And there's issues of, okay, if you give your money to people that sometimes they even spend that money. And you want to avoid that. Getting into an investment club in that case, if you're interested in real estate, actually helps you. Right, because people who are working together to help to create this product. They do all the work for you. Of course, you are going to pay them something extra because they are doing all the work for you, and it just makes so much sense, because because it's a pool of people, like 10, 20, 50 people coming together to buy, for example, buying a whole estate, and then they tell you you don't have to pay the whole amount at once. So this is a real life example. You don't have to pay the whole amount at once. Just do in terms of contribution wise, like every month, a monthly thing, drop like $500 or 500 euros, or drop like 250 euros. And then at the end of, let me say drop every month, drop $1,000. At the end of at the end of 24 months, you've dropped like $24,000. And that $24,000 could actually help you to acquire a piece of land without any omonile issues or landowners issues, and then the survey is being taken care of. Sometimes they even do some architecture for you to say, okay, this is the kind of building we want to have in this estate. They take care of the investment club would also come together and take care of all the legal works. Right? So if you're from Africa, and maybe, for example, from Nigeria, having a trusted investment club to help you in terms of your real estate it's a main choice to go for, because it gives you complete peace of mind. Like, you don't have any stress at all in terms of, but make sure that the people you are getting in business with, in terms of the investment clubs, they are people they are people you can trust, they are people with credibility, right? And there is transparency in terms of that club. So yes, this is a very good option in terms of real estate investment, especially if you want to invest in real estate in Nigeria. Thank you for that question, Oladoyin. Okay. The next question that I will be talking about will be, what are the risks I need? So the question was like, what are the risks I need to watch out for when looking at an investment opportunity? There is I find that as a good question. You know why I find it as a good question? It's because of the euphoria on the the horror of, okay, investing and getting money. Most of us, we don't even think about, what if I lose money? We should always have that that checkmate, or that second thought about something might happen to that investment. So what if what are the risks involved in this investment? What are the risks for me? Because when you think about the risk, it helps you to understand or to actually think deeper and have a clearer view of how you're investing, what you're investing on, when you're supposed to invest, and other things. So this is really, really important, because most of us, we don't look at the risk aspect of things. That's why most people lose money, because you don't look at the risk. You only focus on the return on investment. Risk and investment, they go hand in hand. They are like Siamese twins. You know, they go hand in hand. So you have to like look at these two things together. And that's why I'm more than happy to like talk about this question during this live session. So the first thing you want to look at is the liquidity risk. How is it? So the liquidity risk is, I would say, a little bit simple, because you want to look, and what is liquidity risk? Liquidity risk is the risk of how easy is it for you to convert the investment you have into cash. Is it easy to quickly sell it off if you think you don't want this investment anymore? You think it's not fulfilling its purpose. If it's really difficult to convert that investment to cash, my dear, you might be thinking of you might be losing that investment, because the value might just keep depreciating and depreciating and depreciating until that investment has lost its worth for you. So you want to make sure this is a risk you want to make sure that you are capturing, you are mindful of. So for example, someone told me a friend of his is looking to sell a house. I think in Lekki, or some, not right in Lekki, but a little bit like further away down the Lekki Expressway. I don't know. And then the house, so I asked, okay, so how much is this person trying to sell? And the person said, okay, like 300 million. I'm like, okay, what happened? It's not in Banana Island. It's not in Ikoyi. So why is a house in that place costing that amount of money? And then he said, okay, there's a lot of things that's gone into that particular house. There is self-sustainable energy. There's this, there's that, and that, and that. And the person has been trying now to sell this house for so long, and he's not been able to. I said, yes, because at that and you know, real estate is about location. That particular place that house was built at this particular point in time might not be ready as of today for that value, right? So the person is there, he has made so much investment into that real estate venture and is not able to find a owner, although this person wants to sell off and, you know, maybe move back to his home country, right? And so this investment now has, so while the person was building and investing so much in that particular investment, he wasn't looking at how easy will it be for him to convert his investment back to cash. He didn't look at the liquidity risk of that investment. So it's good to invest there, to, you know, to do that kind of investment, but you want to look at how easy is it for you to convert your investment to cash. So that's the thing about liquidity risk. And so one important thing you want to know about liquidity risk is that if an investment has high liquidity risk, you want to be sure, right, that the return on investment commensurate or is taking care of that risk. Because I mean, something cannot have high liquidity risk, that is, it's not easy to be convertible to cash, and yet the return on investment is low. Those two things, they go together. They are directly proportional. They are not inversely proportional. No, they are directly proportional. Okay, so that's one thing you want to look at in terms of your risk. How easy is it for you to convert your investment back to cash? All right. So if you have any question regarding this particular risk, just let me know. The other thing you want to look at is in terms of your currency risk. And this applies to people who invest in other currencies. So maybe you are in Europe and you're investing in the US market. You want to look at how the currency is moving, especially now that the US is having its election here in the US. How does that affect dollar? Does it become stronger or does it become weaker? Right? And maybe I should bring it home further for you. So for example, if you are, and because I'm in Nigerian, I'll use a Nigerian example. If you are a Nigerian diaspora, right, and you are very well into investing back home, yes, it's good, it's very fantastic for us to invest back home, right? You are so much into investing back home, and you invested, let me say, around December last year, before COVID, let me say pre-COVID this year, you invested like back home, you invested like maybe 400,000, 1 million naira as at the beginning of COVID. Let me say you invested 1 million naira, which is maybe in terms of euros, that would be like working with 400 naira per euro, that's like 2,500 euros, right? Now that the currency, the naira has lost further value, because I think one of the major reasons is because of the oil, and because everybody knows that the economy is not doing well currently. A single euros now is worth like 500 naira, which means by the time that's 1 million naira you invested at the beginning of the year, you want to come, so it has, so maybe that 1 million naira has yielded some 10%, I don't know, let's say like 10%, or let's say you yielded like 10%. By the time you, so that's like 1.1 million. By the time you convert it back into euros as of today, that's no longer 2,500 euros. Oh, that's way less. So you want to consider that kind of risk. What you want to know, you want to be sure that, okay, if currency shifts, you want to be sure that it's not diluting your return on investment or your capital. It's not eroding your capital, your investment, your interest and your capital itself. So that's one thing you want to really, really be sure of. And that's why I would recommend, for example, if you're in the diaspora, you're trying to invest in Nigeria, for example, or in other, maybe you are from India, or you're from, and you know that, okay, the country you are living in, the currency has more value than your home country where you came from. You want to check if they have dollar investment in those countries, and you invest rather in those dollar investment. Especially for people from emerging markets, you want to invest rather in that dollar investment, because then the stability of dollar would help you not to erode your return on investment. This particular topic is broad, and I'll be more than happy to answer your questions if you need more ideas on what type of dollar investment or euro investment you can make in your emerging market that you came from. All right, guys, I think that's on that particular question. The other on that particular risk, the third risk you want to look at is inflation. Inflation affects everybody, whether you are in the US, you are in Europe, you are in Nigeria, you are in Africa, you are in Australia, you are in Asia, you are in Far East Asia, wherever you are, inflation always comes in. So you want to make sure that the rate of inflation doesn't wipe off your investment, your return on investment. Because imagine if I invest 1,000 euros now, and maybe inflation for that inflation is like 1,000 euros, and my return on investment is like 2% or so, or let me say 5%, okay, and then inflation is like 2% at the end of 1 year. The return I'm getting from that investment is actually not anymore 5%. It's actually 3%, because the inflation has eaten out of that 5% that I thought of at the beginning of the year. So you want to look at that. You want to be sure that your return on investment is higher or compensates for your inflation. Okay, so that would be the 3 questions I would answer under investment or finance. I hope they are questions that are burning in your heart and you've gained some clarity. If you need further clarity on these things, do not hesitate to DM me or send me messages. I reply them, and I'll be more than happy to shed more light on these topics. Okay, so I would take 2 questions on career, and we can call it a day. Okay, so the question I received on career was that, what is your opinion about a post-interview thank you email? I know someone will say, do people still send post-interview email? Yes, they do. Yeah. So what do I think about it? I think it's a good idea. I know in some part of the world, people don't care about such things, but it's a trend, or it's something that's, that is not going away, right? And it shows that it's just a way of saying, you know what, thank you for your time that you spent with me during this interview. So it's a good thing to do while you go for interviews. After your interview, maybe immediately once you get home, or even like some hours after the call, just put out an email to the people that interviewed you, telling them thank you for the time spent with you, for the opportunity, because conducting an interview is time consuming. The person has taken time out. Yes, of course the person needs you, but the person has taken time out to listen to you and to give you a chance to vie for that position. So it's something worthy of saying thank you for. And that's why I think it's really a fantastic thing to do, irrespective of which position you are looking for. So far you have the email of the person who spoke with you. Please send an email to the person. It's just a courtesy, I would say. And I also believe it's a way of saying thank you, and I'm really interested in this position. And in terms of content, right? In that thank you email, there are a lot of things you can do. So apart from saying thank you to the person, you can also even show you can also show even further interest, in that particular role you're going for. And probably you forgot 1 or 2 things during your interview. You can clarify those things in that email, right? And then tell them for any further questions that you are more than happy to answer it. You are showing them that, okay, you are open and they can approach you at any time. Okay, so I think sending out thank you email is good. It's a nice thing to do, and yeah, I think it could help you in terms of your chances, reaching out back again to the people. And the thing is, sometimes even if you're not picked for that particular role you're going for, if you have something really nice, if you've written something very nice, the hiring manager might say, oh, I remember this person. Of course, we didn't take him for this role, but then there's this other role I think this person might be qualified for, So I think it's a good thing to do. It's a nice thing to do after interviews. Okay, that'll be that for that question. And another question I got was that I want to switch career path, but I don't know how to go about it. This is a very good question, and a lot of young people ask. A lot of young people, and some people even in their mid-career, ask this question that, okay, they want to switch career path, but they don't know how to go about it or what they need to do. All right, so changing career path should not be something that is impossible to do. It's possible. I've seen several people who had moved from maybe engineering to non-engineering field, or people who are not in engineering, they move from maybe some very science-based topic into engineering, and so there are different things. There are different ways you can actually switch career path. So, however, for me, I have 3 things I would tell you today, I will recommend 3 things. The first thing you want to do is, between your current career path and the future career path you are looking at to switch to, you want to check if there's any interdisciplinary link, right, between your current career and the future one. So, for example, somebody was chatting me up a couple of days ago, and the person was like, oh, Buki, I'm interested in HR, and I'm asking, okay, why are you interested in HR, and blah, like we got talking. And then this person the person was into, and the person was saying, okay, I'm interested more into people development, training, but currently the person is actually into customer service. So I said, so why do you want to change or to switch? And the person said, oh, because I like interacting with people, and I'm thinking of HR because I want to be part of people's career. So I told this person, okay, you know what, between your current customer service role that you are doing and that future role of HR you are looking at, check what is common there, right? So you can make a switch. So for that person, I would first recommend you can make a switch of probably training other people about customer service, right? So you're not just being a customer service representative or manager, but you're also training people on customer service. And now from there, you expand into training them on some other personal development things. And that's how you can transition easily into the learning and development department of your company, or even talent development. So that's an example. So this person is looking at customer service and is in customer service and trying to change into HR. You can look at training, and from this interdisciplinary link, you can as well actually switch easily. So that is the first thing I would say. Look at the link between the two and use that link as a part for your transition. The second thing I would recommend would be that take certifications, and if there is no real clear-cut certification in that new field that you're looking at, go online and take online courses. So I'm telling people, okay, you are in project management and you want to go into digital science or data science, or you are in you're a retail manager, you want to move into project management. Okay, good. Then take certification courses on project management, right? Or you are into engineering, maybe electrical engineering, and you want to move into data science, right? Great. Go online and take courses on data science, right? And there's so many platforms that you can do that now. And actually, companies do recognize those certifications that you get online. I've hired a lot of people who don't have idea before in a particular job role, but because they can show me that, okay, they went on Coursera, they went on Udemy, they went on edX to do some courses, and these are the things they got into. I gave them the job, or we hired them, and those people are still in that new role now. They are doing fantastically well. So of course you can do all those courses to improve your chances of switching. It's not a big deal. It happens, people do it. You can also do it. Okay. And the other thing I would suggest would be that you take internships or volunteering. So maybe after you do all the certifications and you're still not having the opportunity to make the switch, do an internship, right? Or do a volunteering. You can say, okay, in a week I would volunteer like 4 hours. I would invest like 4 hours into supporting you. So for example, this person that said wants to move from customer service into human resources, learning and development, HR, this person can say, okay, I would devote 4 hours or 5 hours every week into doing something or supporting a particular organization in terms of their training, in terms of their development, in terms of their learning and development or their talent development, right? And by the time you invest like 100 hours or thereabouts, you begin to build expertise in this unknown field. And that is how people get expertise. And that is how you can make switches. And when you go for an interview and they say, okay, you want to now work as learning and development manager, but you don't have any experience before in learning and development manager. So yes, I know I don't have it, but then I have done so and so certifications. And for the past month, I've been volunteering or interning 5 hours a week or 10 hours a week with this organization, and these are the things I've been able to do. That's an experience, and that way you can get your foot into the door for that new position you're looking at. All right, and I would stop here for now because I said today we are not going to exceed 1 hour. But before I go, someone has a question regarding, he said, heard so much, that's Joshua. I've heard so much on reverse stock split. What effect does it have on shareholders? Okay, so reverse stock split is just the reverse of the normal stock splits you would have. For example, the normal stock splits Apple had recently or Tesla had recently. Okay, and so and if you've not seen my video about the Apple stock split, it's in my playlist. Go into it and read and learn about stock splits. Stock splits are good for long-term investors. Of course, they're not a form of investment strategies, but they are good for long-term investors. Okay, so back to the question of what effect does it have on shareholders? Before I answer that, what exactly is, like I said, reverse stock split is like saying, okay, you want to bring together 5, so they say 1 for 5, right? Or 5, yeah, 1 for 5. So which means that, imagine if, let me use AIG. AIG recently, or not recently, some years ago, they did a stock split. I think 5 for 1 or so. So they moved 5 shares together and they took it as one. So for example, if you used to have 1,000 stocks of AIG that year, and they did a reverse stock split. So divide that 1,000 by 500 by 5, which means your 1,000 shares that you have would now go back to 200 shares, right? So from 1,000 to 200. And the effect that has is that, of course, they do that because they want to push up, they want to make sure that the stock price is stable. So because if the stock price is too diluted or is too low, by the time they bring it together, right, they try to make it more stable, right, and they makes it look more valuable. So that's why they do that. And the effect that, and one of the things that it helps them to do is that it also, they try to do it in such a way that it could attract maybe investors into investing in that particular stock, because then it gives you some kind of, okay, yeah, it's more valuable, you know, something going from all of a sudden from say peradventure one stock was, before the reverse stock split, it was trading for $10. After the split, let's say it will trade for $50, right? Because now that's like 10 times 5 and now it's 50. So that's the aim. And then this could be a form of using it to attract, you know, investors. And the thing is that reverse stock split can actually go down south, because even if they try to bring those stocks together, the value can keep dropping, right? And that could also affect shareholders adversely. So whether it's good or bad, I don't know. It depends on what is the strategy. But the thing about stock splits generally is that, like I said, it's not an investment strategy. When you invest in stocks, you want to look at the fundamentals of that company. That is what should be the basis of your strategy. You want to look at what is their growth antecedent and what are their plans for growth. Are they in an industry that would grow, right? That's of the future, right? You want to look at that. You want to look at what is their revenue like? Is their revenue increasing or decreasing? You want to look at what is their profit like? Are they losing money or they are gaining? They are getting money. You want to look at all of those things. You want to look at, is this company always involved in scandals or not? So those are some of the things you want to look at. You want to look at their fundamentals, what actually form the basis of that company, and that is a number of looking at their financials, and from their revenue, from their balance sheet, from their income statement, from their profit and loss, you could know if it's something worth investing into. I hope I've been able to answer your question, Joshua. Okay, thank you very much. I also got something from Adeniran. He said reverse split is also more of a corporate action. Thank you also for putting that out there. Yes. So Joshua, reverse split is also more of a corporate action. It's not necessarily targeted at the stakeholder, the shareholders, but you know, sometimes when things happen, there is no way you want to shield the shareholders from it, because sometimes they would be afraid or they are happy, and it's all about the market. Okay, so I think I'll stop there today. Thank you so much for to everyone who joined in this live session. It went so smoothly. I'm so happy that you joined. Thank you for the engagement. Thank you for the questions. Thank you, Oladoyin. Thank you, Adenio. Thank you, Joshua. And thank you for every other person. I'm not able to call your name out right now. And I hope to see you some other time. And don't forget, we will do another session soon. And I'll put the referral code, like you asked doing. I will put the referral codes out there, and anyone that's interested in joining this platform could use those referral codes. And okay, I would also put this video. This video will not, I won't take it out. I'll upload it, and anyone can always go back to check it. Thank you so much, Damilola Taiwo. You were quiet today, but thank you so much. Like I said, I would put the video on, and I will not take it out, so you can join, and then you can share it with other people. And Dami, don't worry, I would not take out the video. I'll put it online so you can watch it later and then share to your platforms. I hope to do another live session in this coming week. If you have any question regarding this coming live session, if there's anything you want me to like discuss, mention in terms of finance, money, or in terms of job hunting, career, just send them to me. You have my different platforms, maybe on Instagram, and Finance with Bookie, on my YouTube here, or on so the next session will be, like I said, this coming week. I want to do because there are so many other questions coming in, and I want to do it as soon as possible. So maybe we'll do, I don't know if Tuesday is too early. Maybe we do Tuesday, and then we can do more of talking about career, because today I realized that we did a lot on investment. So maybe we can have another one on Tuesday already, and I'll be more than happy to also send you the link. Please don't forget to share with your family and friends. Okay. Thank you. Somebody saying it's not too early, so that's great. So I will do another one on Tuesday, and like I said, we'll start with career, and then I'm very sure that people would have questions also on investment, and would also put that on there for people. And thank you so much once again. I would be seeing you again this coming Tuesday, and we'll be discussing, like I said, more on career. All right, have a nice weekend. I hope you are going to have a splendid time. Enjoy your weekend. Be hopeful. We are in the last quarter of 2020. Be hopeful that this last quarter is going to bring good things, right? Okay, see you. Bye bye.